Hey there, Nate Lenz here, and in this video, we are going to be going over something that I get asked about all the time, and that is, what is an interest rate, what's an APR, why are they different, and what does it all mean? And these are two very important numbers to consider when you're looking at your mortgage options, and they're easier to understand than you might think. The interest rate is just the amount of interest you are going to be paying on the principal balance of your mortgage. That is all that goes into that number. APR, on the other hand, is taking that interest rate and factoring in all of the finance-related charges that you might be seeing to obtain that loan to give you the true cost number of that mortgage. Now, these finance charges can come in the form of an admin fee, a processing fee, underwriting fees, discount points, your upfront mortgage insurance, your mortgage insurance. All of this gets factored into calculating that APR. But the purpose in obtaining both of these numbers is so you can quickly look at it and say, okay, I got a 6.5% interest rate. I have a 6.875% APR. That's a significant gap, so there's probably a good amount of finance-related charges that I need to go investigate. And the great news is if you've obtained a loan estimate or fees worksheet, which you should have, you can quickly investigate where those charges are. If you just go to page 2, most of these finance-related charges are going to be in section A on page 2, with the exception of upfront mortgage insurance and credit report fees. Those will be in section B, and your monthly mortgage insurance will be broken down on page 1. But you can quickly go investigate into what these fees are and why the APR is so different from the interest rate when you're comparing mortgages. Now, this is all great to understand, but let's take a look at how this can actually play out in the real world when you're looking for mortgages and what might happen. I get the call occasionally from clients that I've been working with for a while that say, hey, Nate, we've loved working with you. It's been amazing. You've done such a great job. However, we did finally start to go look for other rate quotes, and we got somebody to quote us a rate that's a little bit lower than yours. Can you beat this? And I have to be the one to break the questions to them of, hey, do you know if this is an APR or if it's just the interest rate? Do you know if there are any other fees associated with this? To which they most often say, no, this was just verbally quoted to me, or this was just sent to me in a text or an email. I don't have much more information than that. So I send them back to that loan officer with some questions, and in most cases, they come back confirming my suspicions. They were just being quoted the APR and not really disclosing the interest rate and how much cost really went into obtaining that mortgage. So to see how that plays out, let's look at a couple of examples. Let's just say you're talking to a loan officer who quotes you a 7.25% interest rate and a 7.282% APR. Right away, we can see that the spread between those two numbers is pretty minimal. So in this case, you're probably only looking at an underwriting fee of $1,100 or $1,200, and that's it. Now, we look at your quote from option number 2, who just told you, hey, I can get you a 6.723% rate. Now, that sounds great because it's 0.5% or more than 0.5% lower than what you've been quoted on the interest rate on option 1. However, upon further investigation, you find out that the interest rate on that option is 6.5%. So we see that there's a pretty big gap there between the interest rate and APR, and you know right away that you need to go look at the loan estimate to find out why that difference is there. And going through that loan estimate, you find out that there are $9,427 in discount points that you need to pay to obtain that mortgage. So in this instance, somebody quoted you an APR to make it sound very appealing and did not go over all of the details with you or give you both the interest rate and the APR. So at first glance, it looked very appealing. This is unfortunately all too common, and you need to be sure you're actually getting all of the information that you need to make the best choice. Now, in this case, if you want to compare both options, option 1 probably had your best interest at heart, so way heavy on their advice. But if you want to compare these two options, just ask them both for a specific interest rate and loan estimate for that rate. And if they're done within a relatively similar time period, you can compare them apples to apples and decide which one actually is the lower cost option. So I hope that helps you understand the difference between interest rate and APR, but more importantly, I hope that helps you understand how they should be used and how you should pay attention to them. So if that did help you, please like and subscribe to this video, or if you have any questions, comment below, and I will see you in the next video.